Hi everyone, welcome back to the Rich Podcast. So as you can see, we are going to do this video in stream. As Vinod sir is out of station, we'll continue this for upcoming days. So recently I came across an article from the Mint newspaper. So I thought it would be interesting if I do in a podcast video. So the article is why stronger dollar is dangerous.
Mm,
So in this article, they mentioned what are the implications if dollar becomes stronger.
mm,
We see a lot of news that rupee is weakening. By that, they measure with in terms of dollar, and they say that rupee is weakening. So when they mean dollar is getting stronger, on what metrics do they measure that the dollar is getting stronger?
Well, when they say stronger, weaker, they mean in comparison to exchanging between each country's currency. So let's say when the rupee is becoming weaker, that
Mm.
means you get more rupees for a dollar.
Okay.
Same way, if the dollar becomes weaker, you will get less rupees for a dollar.
Mm.
So if you are a company which is importing into India, your
Mm.
import cost will come down because most international trade happens on dollar.
Okay.
Same way, if you're exporting like your pharma and IT companies,
Mm.
you'll get more revenue for the same amount of work or
Okay.
same amount of product.
Mm.
So this is what strengthening and weakening means.
Mm.
Now, what is happening is,
Mm.
in I've explained this before, and Anand also has explained this before. The Fed has been increasing interest rates in the US. And the
Mm.
reason why the Fed has been increasing interest rate in the US is domestically in the US they've been having inflation. That
Mm.
means things are getting more and more expensive. And the Fed doesn't care about the global economy. I mean, their first priority is local economy.
Mm.
Domestic is what they want. And the first thing they want to fight is inflation. And one of the ways they fight inflation is raising interest rate. But what happens when interest rate is risen is it becomes more profitable to keep your money in the US. One of the
Okay.
biggest foreign investors are people who are in the US.
Mm.
The American equity market and the American investors are the largest pool in the world, especially for developing countries like Mexico, India, China,
Mm.
uh, Brazil,
Hong Kong,
Americans,
can you say?
Hong Kong.
Mm.
Americans tend to spend a lot of their investments abroad because they get better returns.
Mm.
So even if they take the conversion into account, if they make, let's say, 12, 13% earnings, it is better to invest your money like that than keep it domestically in the US because the interest rates in the US are very low. But now what has happened is the interest rates have gone up. So
Mm.
it is much better to invest locally and domestically in the US, considering all things geopolitically, what's happening and everything. Investors feel it's safer to leave money in the US. So that terms what happens is more money leaves countries like India,
Okay.
Japan, and all this starts going back to US.
Mm.
And the problem for economies like, let's say, India and Japan is our interest rates are at a level, and
Mm.
our inflation is not as bad as what is US's inflation. But if we start lowering our interest rates to, you
Mm.
know, foster growth domestically, our export and imports start going crazy.
Mm.
So, if you want a good example, Japan is a great example because the yen has been becoming weaker and weaker with the dollar
Okay.
because the interest rates are near zero.
Mm.
So a lot of money which is can come to Japan will not come to Japan because it's better to go to US.
Mm.
The difference itself, it's cheaper now to borrow money in Japan and to take it to US and invest it in US because Japanese economies are fully open and fully convertible currency.
Okay.
So if I'm sitting in Japan, I can borrow at near zero interest and take all that money to US and buy US treasury bills, and I'll be making sweet profit. It's happening. And
Mm.
even for India, though India is not fully convertible, investing in Indian market, equity market will not look as attractive as would if the dollar was weaker.
Okay. So in that article, they have mentioned the currencies which have weakened against the dollar, and in that rupee have depreciated the least, starting from the period January to April of this year. So why is that rupee has depreciated the least and Japanese yen has depreciated the most against the US dollar in this period?
Well, the Japanese is depreciated more because the Japanese interest rate is much lower compared to India.
Mm.
India interest rate is much higher.
Okay.
So erosion has not been as severe. And also, India's economy is in a different stage compared to the Japanese economy right now. The Japanese economy, after 40 years, is slowly coming out of stagflation and they're slowly recovering, while Indian economy is robust and it's growing at a fast clip. So we are at different economies right now in
Okay.
terms of growth, in terms of attracting investments. So taking that into context, plus the interest rate difference between Japan and US and India and US is also something to take into consideration. So the Japanese have a bigger problem. That's why the Bank of Japan, their main bank, came out saying that they're looking at raising interest rates because everybody was hoping that by end of this year, end of last year, they said the Fed will definitely cut it 4 or 5 times. They said. Then beginning of the year, they said, okay, second half of the year they'll cut it 2 or 3 times. Now it's become very clear that they're not looking at cutting it throughout this year. Plus, the election cycle is coming in the US. The elections are made things far more difficult for the Fed and the US economy altogether. Though the Fed does not participate in elections, their policies are not related to elections. You cannot but be influenced by what is happening because at the end of the day, we are all humans. We all have our opinions, and our opinions play a role in these things. Though we try and keep ourselves as fair and level-headed as possible, opinions do filter in. So this happens, and the Fed now doesn't look like it's going to be cutting interest rate anytime soon. So the Bank of Japan also has no option but to raise interest rate, and their economy is in a fragile position where the interest rate raising can also hurt them because they're also coming out of, like I said, stagflation. So what is going to be really interesting is going to be the American elections.
So as you were talking, the US election is going to happen in the November, and in that article they have mentioned that Donald Trump might prefer weakening dollar. When a currency is good, it is good for the economy also. Why is that Donald Trump will bring policies which will weaken the US dollar?
Well, strong dollar doesn't mean it's good for the economy. Let's get that
Mm.
understood. Because what problem Americans will face, and Donald Trump being a businessman knows this more than anybody else, is because a strong dollar would make your exports very expensive
Mm.
and your imports cheaper. And that's not going to create job growth and stimulate the American economy in the long term. He would like American exports to increase and American
Okay.
imports to come down and to create more opportunities and companies to create factories and jobs in America. Then Americans looking at importing things from outside America because it's so much cheaper because of a strong dollar. There will be really no motivation for companies also to set up shop in US. It'll be much cheaper for them to set up shop in any friendly place, even Canada or Mexico, wherever, and send it into US than opening shop in the US because of the dollar being very strong. So he will sit on the Fed's head, and if the Fed doesn't be nice to his play, he'll say, "Okay, I'll remove this Fed chairman, and the next guy who comes will be
Mm.
friendly to me and listen to my policies." This is what he will say, and that's understandable. So there's a good chance that interest rates will be cut and dollar will weaken if Trump comes to power. Now, the flip of it, if Joe Biden wins, what is going to happen? Well, that is difficult to say because Joe Biden has not really taken a position on this. He's
Yeah.
always maintained the Fed is independent of government and the Fed does what it's required to do to stabilize the American economy and to take care of domestic needs. Of course, they are also wishing the Fed will cut interest rate because cutting interest rate will help them. But right now, there is no pressure on him to do that because the American economy is very strong. The job numbers are very strong. So there is no real reason for the Fed to look at cutting the rates right now. And Joe
Mm.
Biden seems to be agreeing with that. And that's why he's also very neutral about it and he's not really talking about it. But the problem for Joe Biden is whatever the economy US has been growing and been doing well, the working class is not feeling it. You know,
Mm.
the good American economy is not being trickled down or whatever you want to say. They're not feeling it. And that is a big problem for him. He needs to address that. He needs to find a way where the working class, the middle class people in the US feel the benefits of this American economy, which is so strong right now. So it's interesting. It is not great for the world economy, the American
Mm.
dollar being strong. So we have to wait and watch. That too, now with all kinds of news about, we already spoke about the Saudi Arabia moving away from the petrodollar
Yeah.
and accepting other forms of. So, what are the further events which are going to happen? We'll have to wait and watch. Like I said in the previous video, sometimes change does not come in one big bang. It comes very neatly.
Yeah.
They finally say the straw that broke the camel's back. We keep on piling load, more load, more load, more load. Finally, it buckles under the weight and it collapses.
Yeah.
Sometimes it happens like that. World War One started like that. One insignificant assassination propelled the whole world, plunged it into darkness, and we all fought each other. And that's what led to World War Two. So we do not know what event can transpire, and nobody can predict these things. Yes, we'd like to be optimistic, but sometimes we should be realistic at the same time. So let's wait and watch and see what happens. Is what my opinion.
So I hope that this video is informative, and I suggest you read that article and have some understanding about why strengthening dollar is not good for the world economy. And I'll place in the description so it will be easy for you to read. So if you find this video informative, please share it with your friends and subscribe to this channel for more videos. See you in another episode with an interesting topic. Thanks for watching the video.
Thank you.